This is 95.3 Business Now.
Welcome back to Business Now. The Central Bank of Nigeria took the country's headline interest rate to 26.75% by adding another 50 basis points to 0.50% to the 150 basis point that was delivered at the last meeting. Well, the CBN on Tuesday tightened the asymmetric corridor around the MPR to plus 500 basis points or minus 100 basis points, while leaving the existing cash reserve requirement for deposit money banks at 45.0% and the liquidity ratio at 30.0%. Well, walking me through those decisions and the expected impact on the market is Johnson Chukwu, investment professional and the CEO of Cowrie Asset Management. Good morning. It's good to have you join us again on the program.
Thank you for having me.
All right. The MPC pivots to a less hawkish stance this time around, raising, by 50 basis points. Was this in line with your expectations? What are your thoughts?
Interestingly, I had actually predicted that they will raise the interest rate more subtle this time around. They're more subtle in raising the interest rate. And I had predicted between 25 basis points and 50 basis points. So I was paused on the 50 basis point. And the reason is that the issues around the policy orientation of the central bank is that they want to maintain price stability. And the CBN government has said prior to the MPC meeting that as long as inflation rate pressure persists, that they will continue to tighten. But then, according to the interest rate environment, it's a disincentive for the real sector to produce. So you're going to have a situation where in the next couple of months, you're going to see a material slowdown in productive activity. So I think what the central bank did was to balance between the need to tighten further in response to the 34.19% inflation rate and the obvious challenge of low productive activities, paucity of credit release sector of the economy, and high cost of credit release sector of the economy, which are stifling the productive activities of the economy. I also, having said that, I also query the premise on which the continuous testing in place, which is we're dealing with high food inflation caused by insecurity, dealing with high energy costs caused by artificial effects of naira depreciation, but we're not dealing with excess liquidity or demand-induced inflation. There's what is called demand pull or supply pull inflation. When you talk of demand pull inflation, it simply means that the volume of demand, the aggregate demand economy far exceeds supply, and therefore prices are going up. But that's not what we're dealing with. We're dealing with a supply-induced inflationary pressure, which is saying that you don't have enough of those goods being demanded being supplied, and therefore prices are high, and that's coming to issue of food inflation. So in terms of the logic of underpinning the continuous increase, I think we need to review it again. But in terms of orientation, which the central bank has said we will continue to increase as long as the inflation pressure continues. I knew inflation moving from 33.9% to 34.19% will definitely lead to a further tightening.
Well, indeed, because now that we're talking about price stability and all, you've also just mentioned it. The headline inflation came in higher at 34.19%. That was in June. Essentially, do you think the central bank can achieve price moderation through monetary policy adjustments alone?
No, the answer is no, and they have said that repeatedly. Right from the immediate past, the past four CBN governors have always, let's say past three CBN governors, Sanusi, Gordon Emefiele, and the current one have always emphasized the need for the fiscal authorities to do their own part. If you look at what I said, the pressures we're having on prices coming from shortfall in food production, largely, and as well as low FX earnings, which has weakened our currency and making us to convert dollar at a higher naira rate. So those factors you have to recognize are there. And because they are not monetary issues, they will not be addressed by monetary policy. You have to address the issue of productivity in the economy that will make for more goods or more food being produced in the economy so that the supply will meet demand.
Let's now look at, because you said it's not just monetary issues. What are the fiscal actions that are needed urgently, to achieve this price stability, achieve growth, and support the battered local currency?
Two things. we need to address the issue of insecurity in the major food belt of the country. Once we address the issue of insecurity in the major food belt of the country, then we will bring down food inflation, which is about 40.87%. We need to address crude oil production. If we address crude oil production, we're going to earn more foreign exchange, which will help us stabilize the exchange rate and moderate the pass-through effect of naira depreciation. Those are the core issues that have to be done to help us reduce the inflationary pressure.
But I'm also curious to know, how much longer do you think the CBN can hold on using its tools to rein in inflation while waiting for commensurate fiscal policies and actions?
I said that the CBN owner has said that as long as the pressures continue, that they will continue to tighten. But now I think they are going to be tightening at a slower pace, or they are going to be more conservative or more subtle in their tightening.
All right, we appreciate your time on the show this morning. And as always, do have a great day ahead. Johnson Chukwu, investment professional and CEO of Cowrie Asset Management.
Thank you for having me.
All right, you're welcome, sir. Well, let's quickly go ahead to the markets and run you through a bit of Tuesday's trading day on Broad Street and across. We'll look at the Nigerian equities market reversing Monday's gains. A sell-off in Zenith Bank that went down 1.6%, UBA 1.5% in the red. FBN Holdings printed 0.9%, also negative. All of this caused a 0.08% decline in the NGX All-Share Index. Let's quickly look at money market overnight lending rates. Among commercial banks on Broad Street expanded 610 basis points to 31.9% despite the inflows from the open market operation maturities of 41 billion naira. While trading in the Treasury bill secondary market was negative, the average yield advanced by 22 basis points to 25.1, and trading in the FGM bond secondary market remained bearish as average yield rose by 2 basis points rather to 19.2%. Quickly, the naira depreciated. That's our local currency, falling again by 3.1% to 1,548 naira 76 kobo at the Nigerian Autonomous Foreign Exchange Market. Let me quickly give you what the oil market is saying this yesterday. Oil falling U.S. crude inventories caused oil prices to rebound on Wednesday. That's this morning after several days of decline, while expectations for a nearing ceasefire deal in the Middle East kept prices from continuing to climb. Brent crude futures for September rose 46 cents to $81.47 a barrel. And the U.S. West Texas Intermediate crude for September increased 42 cents to $77.38 a barrel. So U.S. crude oil, gasoline, and distillate inventories fell last week, according to market sources, citing the American Petroleum Institute, which is a trade organization. Benchmarks picked up accordingly. WTI had lost 7% over the previous 4 sessions, and the Brent shed nearly 5% in the previous 3 sessions. So the API figures, that's the American Petroleum Institute, the figures showed crude stocks falling by 3.9 million barrels in the week ended July the 19th, and that's what the sources said. Also speaking on the condition of anonymity, gasoline inventories fell by 2.8 million barrels and distillates shed 1.5 million barrels, and that would be the first time crude stocks in the United States fell for 4 weeks in a row since September 2023. Well, official government data on oil inventory data is due for release today, Wednesday. And that's the package of a show this morning. Today, the 24th of July. I am Aramdi Florisho. We wish you a great day ahead, everyone. It's bye for now.
This is 95.3 Business Now.